Hey YouTube, Freedom for Kaz here. Hey, what's going on out there? I hope you're doing alright. I know I'm doing good. It is Friday. Looking forward to a great weekend. But first, let's talk about the economy. Wall Street Journal says, Fed moving closer to action. Yes, we all know what that means. Possible QE3 coming up. And basically what it says is that they had a meeting a little while back, July 31st, through the 1st, over those 2 days, and the minutes of the meeting show that there is a clear consensus for taking steps unless the economy picks up steam. And the Fed is very concerned about the economy slowing down because mainly it has pretty much come to a snail's pace improvement, if it's improving at all, honestly. The numbers they give us are always fixed, as we know, but anyway, there's a little diagram right here that shows that they are very concerned that the economy is going to drop off early in 2013, and it's not good. It's not good for the American taxpayer, and it's not good for the American companies. And I've done some research on this as well. I've read the article. This is from the Wall Street Journal. You can find it online as well. I suggest that you go and do read it and find out just what's going on. But let's take a moment here to flip to the page here. And it says right here that the Federal Reserve is moving closer to taking action. And again, they're talking about QE3. They're talking about the bond market. They're even talking about possibly more stimulus as well. That's just one option. But here's another article. It says fiscal cliff has many perils, and they are afraid here. It says CBO warns of recession. More big deficits are on the way, and this is actually really huge right now. And it's not a surprise that this is happening. I mean, it's a total destruction of the United States, basically, and they're trying to destroy the middle class. And, being from Michigan, near Detroit, there's always talk about the big three and what's going on with them. And, GM is in a position right now to where they are kind of treading water right now. Some people beg to argue that GM is well on its way to doing well. But honestly, if you actually take a look at what's going on, if you look inside the numbers of GM, they're definitely in trouble. And even though they have some things on the horizon, it's not a very strong picture of where GM is at right now. So let's get started on that. It says, all the links will be underneath as well. It says stocks pull back after Fed decision. And this was a couple days ago, mind you. But I just want to read you this part. It says, on the corporate front, U.S. automakers report U.S. monthly sales on the day. Chrysler posted its best July since 2007, selling 126,000 units, representing an increase of 13% from the same month last year. Okay, so they're up 13% from the same month last year. That's great. But now let's look at GM. General Motors stock price is at $21.34, which is terrible. Reported its vehicle sales dropped 6% to 201,000 in July, compared with a year ago, as sales to fleet customers plunged 41%. So GM is obviously moving in a different direction than Chrysler is. Both companies got bailouts. Chrysler is seems to be moving forward, but GM is definitely it appears as though it may not be headed in the right direction. Now, here's one of the headlines that I found here. General Motors is headed for bankruptcy again with a question mark. And this is the article. President Obama is proud of his bailout of General Motors. That's good, because if he wins a second term, he's probably going to have to bail GM out again. The company is once again losing market share, and it seems unable to develop products that are truly competitive in the U.S. market. Right now, the federal government owns 500 million shares of GM, or about 26% of the company. It would need to get $53 per share for break even on the bailout. But the stock closed only at $20.21 a share on Tuesday. This left the government holding $10.1 billion worth of stock and sitting on an unrealized loss of about $16.4 billion. Right now, the government's GM stock is worth about 39% less than it was on November 17th, 2010, when the company went public at $33 a share. However, during the evening time, the Dow Jones Industrial Average had risen by almost 20%. So GM shares have lost 49% of their relative value to the Dow. It's doubtful that the Obama administration would attempt to sell off the government's massive position in GM while the stock price is falling. It would be too embarrassing politically. So yes, Obama is in a definite a spot with the government owning GM, but GM is not headed down the right path, it seems, and it, you know, some people say that GM is going to make a rebound, but if you look at its track record from the time it's gotten the bailout, it's not headed in the right direction. It doesn't seem like it's headed in the right direction, but time will tell. Another story here, Washington Market Watch. Members of the Federal Reserve got closer to pushing the button on a new round of bond purchases, even as a less aggressive step of altering language on a low-rate pledge seems to be in the works. According to minutes from the most recent meetings released Wednesday, the minutes of the meeting on July 31st to August 1st of the Central Bank's Federal Open Market Committee showed a central bank worried of signs of a decelerating growth. Now again, you know, everything that's going on with the European markets and everything, yeah, everything seems to be slowing down. So if everything is slowing down, this is not good news for GM. There's an article underneath here as well. It says, get ready for QE3. And you guys can click on that and check that out. And then, you know, again, there's more links on here about GM. And here's another thing about GM is that they've really gotten into the subprime market as far as for automobiles go. And it says GM made record profits in 2011, though the success has slumped a bit in 2012. A story published Friday in the Investor's Business Daily suggests that part of GM's growth can be attributed to the increase of subprime auto loans. As with home financing, a potential car buyer's credit score is based on a scale between 300 and 850 points. In 2010, GM bought subprime specialist AmeriCredit and renamed it GM Financial. GM Financial provides more than 8% of loans offered by GM. And of those 8%, 93% are with buyers with credit scores below 660. The cutoff between prime and subprime is that number. Not only is government-owned GM making more subprime loans than before, the loans it is making are increasingly going to those with worse credit scores. The IBD notes from the fourth quarter of 2010 to the first quarter of 2012, GM's financial loans to customers with the worst FICO scores are all below 540. And these sales of the credit scores of 540 or lower have increased 79% inside of GM. So they are basically doing the same thing that the housing market did, and they are taking a risk on these people who have less than stellar credit. And we all know what happened with the housing market when that happened. You know, the housing, it was a giant bubble, and then it burst, and then this is what happened. The economy fell apart. The housing market got destroyed. GM is making their own bubble right now, in a sense. Okay, they're betting on these subprime loans that it's going to pull them through. Folks, all the links are underneath. I just want to, point out couple more things here is that the models that are in question, mainly for the subprime loans, are the Chevy Malibu, the Chevy Cruze, the Silverado. Those are the three main automobiles that are being sold as subprime. I mean, they're doing all their automobiles as subprime, but those three are the main ones. Alright folks, that's my report for today. Let's have a great weekend. I know I'm going to have a good weekend going up north, getting away from the city for a while, a couple of days, going to get some fresh air. So, you guys take care. See you when I get back.